Hello future millionaires, welcome to this tutorial. In this tutorial, I'm going to try as much as possible to explain to you what financial market trading looks like. At the end of this tutorial, you should be able to have some background knowledge that at least will help you to get some major understanding that will help you along your journey. If this is your first time of coming to my channel, I would say that you subscribe to this channel, especially if you want quality information that will help you get better understanding about how to trade the financial market. And in the course of this video, if you come to like it, I would like to also say that you actually like the video so that YouTube will be able to show the video to more people who might actually be searching for similar solutions like you. So having said that, let me take you to the tutorial. So for this tutorial, I made about 5 slides for you, and then I'll try my best to explain what currency trading is all about using these 5 slides. So introduction to currency trading. What is currency trading? Trading is price prediction in the market for the purpose of making profit. So you're coming in to predict prices of assets in the market for the purpose of you making money. Now, how does trading work? How does it actually work? The first thing you have to bear in mind is that what you're trading are financial instruments. Those financial instruments can come in terms of fiat currency pairs like GBP, USD, USD JPY, that is the United States dollar against the Japanese yen, or the pounds, Great British pounds against the US dollar. And then when do you actually make money in the market? You make money via speculation. So the whole bulk of the work we do when we are trying to trade is price speculation. So you profit from changes in price. The aim is to predict whether an asset will weaken or strengthen against each other, or it will strengthen or weaken against economic data. Now, when you're coming into the market to make this speculation, you need information for you to be able to do that. The tool you use here to make profit is information. So those information can be technical and they can be fundamental. And the essence of this information is to increase your probability in the market, to increase your probability of being right in the market. Now, let me show you what I mean here. For instance, what you're seeing on your screen right now is a technical analysis of this particular currency pair. This is GBP USD. So this is a technical analysis. It means that all of these lines that you're seeing drawn here and all of these things, they carry information. This is telling me something about this price, and this line here is also telling me something about this price movement. This is what we call technical analysis. So when you are using technical analysis, you are using the movement of prices. Each of the candles you're seeing here represent price volume. So meaning that there was a time the price was here at 1.25850, and there was a time the price moved even up to this point at 1.26539, and the price came down again to this point where it is now at 1.26176. So each of the candles you're seeing here represent price movement. So the representation of that price is what you have in terms of candle. So if you're going to be using fundamental analysis, then you want to have a deep understanding about chart patterns and a lot of other things that you're going to be learning for free on this YouTube channel. Now, the other way to also analyze the market is what we call the fundamental analysis. Now, fundamental analysis simply means you're using economic situations of the currencies or the commodities or the financial instrument you're trading. You're using the economic situation around that particular asset to predict price movement. And so one of the places we use for Forex trading, which is currency pair trading, is forexfactory.com. So here we have data of countries that are released on their economy. We have data of economy released about countries. Like here you can see USD, this is ISM manufacturing PMI. So we use important indicators like CPI, like GDP, That is their gross domestic product, like the other information to make sense of how strong that particular currency of the country is going to be or how weak it is going to be. So basically what I'm trying to say is that you need to have a handful of technical or fundamental analysis, that is information, for you to be able to increase your probability of making right speculations in the market, since the bulk of the work we have to do is to make price speculation. Now, the other thing you want to know is that there are market participants. So you're not the only one coming to the market to make the speculations. We also have other people like you, fellow traders like you, who are also coming with their own information. We have banks, we have financial institutions, government, big corporations putting their money, putting their belief in their own speculation. And of course, we have trading platform too. So what is the work of the trading platform? Trading platform gives you access via online platform, and so that you can be able to use their tools and resources for market analysis, for managing your positions, and then for executing your trade. And one of those trading platform is this one that I've shown you here. These guys allow us to be able to make market analysis, and this is TradingView. I really don't know if TradingView is a broker, but I know they provide you with access to charts like this, and then you can have access to multiple charts. This is GBP USD. Any currency at all you want to trade, you can type it here: USD, JPY, that United States dollar against the Japanese yen, and then you can also see charts. You can see how the price movement has been so far for this particular currency pair. And it is not only restricted to currency pairs. You can also do this. You can also do this for commodities. For instance, let's type in XAU, and this is the symbol for gold, and then let's type in USD, for instance. So when we are trying to speculate the price of gold against the US dollar, this is the chart where we can do that technical analysis. And of course, the data released on US dollar here impacts the movement of gold, and that's that about that. So now the next thing I also want to tell, the next thing that you want to also know about is the difference between currency trading and other financial instrument. Now, when you are coming into the market, you are going to be choosing which particular instrument do you want to trade. Do you want to be trading currency pairs, or do you want to be trading stocks? Do you want to trade commodities, indices, cryptocurrencies, and the likes of them like that? So let me quickly give you a brief explanation, and let me see if I can make a difference between this financial instrument. When commodities simply means we are referring to gold, diamond, you can copper, you can speculate the price of this oil and the rest of them like that. Yes, the crude oil, you can make speculation of their prices against some other currency pair when you are coming into the market. And then stocks are actually shares of companies, major companies, listed companies, well-recognized companies. These are their shares. So you can also decide to trade the shares of those companies, speculate whether the company's share is going to go up or is going to come down. And then we have indices. Now, indices mostly is the combination of stocks of groups of companies that are well recognized. For instance, we have a particular indices we call the US 30, one of the most important stock that is followed in the United States of America. Now, US 30 is a group of stocks of about 30 companies, I think, like that, that are well to do in the United States. And the performance of these particular indices is used to also say how healthy or how unwell the US economy is. So we have different types of indices, and then which will take me to also letting you know about what we call synthetic indices. Now, when we talk about synthetic indices, these are also prices of group of assets, but that are derived. The prices are not real, the prices are derived, and they are modeled towards a particular real or right asset or original asset. So part of the places where you can see synthetic indices is Derive. So when you come to Derive is a particular broker who gives us access to trade synthetic indices. So they have different types of indices that you can trade. You can trade volatilities, you can trade crash and boom, and a lot of other indices like that. So that is that about this. Let's talk about cryptocurrencies. Of course, over the years, cryptocurrency has become popular, and cryptocurrency simply mean digital currencies. Forex deals with fiat currency, cryptocurrency deals with digital currency. So it means you can speculate the prices of cryptocurrencies since they are also accepted as means of store of value and exchange in some countries. You can also speculate their price. For instance, you can speculate the price of Bitcoin against the US dollar. You can speculate the price of Bitcoin against Ethereum. You can speculate the price of Bitcoin against Solana and the rest of them like that. All right. So what do I need to have to begin trading the financial market? What are the tools you need to have for you to actually begin trading the financial market? The number one tool is your mindset. Now, you don't want to come in with the mindset of trying to make money as fast as possible. Of course, the reason why you came in to looking out for this opportunity is money making. But if you come in with that particular mindset, you're going to miss it and you will lose a lot of money. So you want to come in with the mindset of learning a skill. Navigating the financial market requires some kind of six skill sets like risk management, like ability to be patient, like ability to analyze information, and some other abilities that are linked to a successful trading. So you want to make sure that you have the right mindset. Where do you get this right mindset from? You get it from the right mentorship, from the right program for people who can train you and teach you on their strategy and the way they think when they are trying to get into the market or when they are trying to get out of the market or when they are trying to take a trade and the likes of them like that. Then the other thing that you need is you need a smartphone or a computer system with a good internet access. Now, most of your trading are going to, all of your trading are going to be executed online. The platform for trade execution is online. The platform for trade analysis is online. So there's no physical place where you can find Forex office so that you can submit your order and then exchange currency and submit your money. No, everything is done online. So you need internet access. And I've talked about the right mentorship. The other thing you need is the right information and the right mentorship. You can see that mentorship is coming over and over again, and that is because of the power of having the right person to coach you, especially when you are starting out the journey. Now, the other thing you need to know is you want to understand your schedule so that you know your approach to markets. Now, your approach to the market now gives us the kind of trader you want to become. Do you want to be a day trader or a scalper? That means when you come into the market, you open and close your positions within 24 hours. Or do you want to be a swing trader? Does your time allow you to be a swing trader who will come into the market, open positions, and then you can stay there maybe for days, 2 days, 3 days before closing the position? Or do you want to be a position trader? You come into the market, you open and close your trades beyond 1 month. You can open a position today, and then in the next 1 month is where you are going to be closing that position. If your information allows you to do that, your analysis allows you to do that, why not? You can become a position trader. And these people are also called the investor trader. For me, these are people who can leave positions for about 3 months, 1 year, 2 years. They can buy an asset and then leave it for 5 years and then believe that that asset will keep going in their direction, the direction they have speculated. So you want to know what kind of trader you want to be. And then the last thing I'm going to say here is that if you do not actually want to be an active player in the market, there is also a space for you to be what I call a passive trader. As a passive trader, what do? You rely on active traders, people who go into the market, who actually do the research and market analysis and decide on the direction of the market. You go to them, you give them your money, and then they trade on your behalf, and then you have a pact with them where you can share profits with them. Like that, I say you are a passive trader. And so that is how we are wrapping it up on this tutorial. I hope you've been able to find one or two value and you've been able to add to your knowledge about how to trade the financial market. If you find value in this video, don't forget to like the video and don't forget to subscribe to the channel so that you'll be the first person to be notified anytime we are bringing out content like this. Bye bye until I see you next time.